Emirates Airlines reported its weakest full-year profit in a decade, with net profit plunging 69%. The Dubai carrier described it as a tough year, attributing the poor earnings to rising oil prices, a strong US dollar, and falling travel demand. Net profit came in at $237 million, while revenue rose 6% to $26.7 billion. Last week, the airline warned its profit would be lower than previous years.
SoftBank posted better than expected annual profits driven by higher valuations of its tech investments. Net profits rose almost 36% to $12.8 billion in the financial year ended March, while operating profits saw an 80% increase to nearly $22 billion. SoftBank's investment in ride-sharing giant Uber also paid off. The value of that gained at $3.8 billion. SoftBank shares gained 0.7% from the start of trading day in Tokyo.
Well, the Japanese electronics maker Sharp has cut its earnings forecast for the current business year ending in March 2020. It now expects operating profit to come in at almost $910 million. That's well below the target of $1.3 billion it set 2 years ago. The revised outlook comes as Sharp booked an almost 20% drop in operating profit in its fiscal fourth quarter. Sharp provides screens and camera modules for Apple's iPhone. Its parent, Foxconn, is trying to reinvent itself by cutting dependence on Apple as smartphone sales reach a plateau.
The British retailer Superdry is not wearing it well. It's given yet another profit warning, saying it would miss market expectations for the full year just ended on the 27th of April. Hurt in part by weak online sales. This is its third profit warning since October, and it comes just weeks after founder Julian Dunkerton began efforts to revitalize Superdry after winning a boardroom battle. The profit warning sent its shares into a rollercoaster ride, down as much as 8% before recovering into the black.